Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Thank you for coming back for another episode of technical analysis. It seems that you guys really like my technical analysis based on the last few videos, so I'm coming back today with full analysis on Facebook, Apple, Amazon, Netflix, Google, and I'm going to sneak in Tesla as well. Over the past few weeks, we have witnessed a mini correction in the technology sector, and there are a lot of reasons for this. One of that is interest rate has been on the rise. When interest rate rises, the present value of assets decreases. The second reason is rebalancing portfolios. The fund managers will look to rebalance their portfolio periodically. And so if technology stock has been growing so much in the last quarter, they will opt to sell some of those technology stock and transfer the money into safer play, the value play, or the recovery play, such as airlines and cruise line stocks, in order to balance their portfolio so they're not heavily tilted toward tech stocks. Then there's the risk of inflation. One could say that our portfolio's been growing so fast in the last year as the result of inflation on the rise as well. So in the midst of uncertainty, I often resort to technical analysis to help me with the short-term projection of the stock price for three reasons. The first is that for the stocks that I strongly believe in, I need to know how low could it go so I could be mentally prepared to hold through it throughout the correction, and at the same time preparing funds necessary to buy more. The second reason is that for the stocks that I don't strongly believe in, I should sell now. And the third reason is that I need to know the strong support levels so that when the stock breaks through certain level with the strong possibility of a bounce, I can enter options for short-term profits in order to make up for the correction in the market. If you are new to my channel, please consider subscribing. I talk a lot about investing, trading, and personal finance. I hope you come back for future videos where I will walk you through my investing journey. So first, we need to talk about QQQ. QQQ is an ETF that is quintessential to the technology sector. Right now, QQQ is trading below its 50-day simple moving average, which is $321. On the weekly chart, it does seem to be just doing a mini pullback. It doesn't really do anything much from a bear side, and the bulls still have it. Looking at the daily chart here, QQQ has been trying very hard to get to 321 over the last 2 weeks, and an all-time high would be $338. So if it is between 321 and 338, I do believe that QQQ will make an all-time high above 338. Now, if it is struggling below 321 for another week or two, there is a good chance that it's going to fall back down to 290, which is 200-day simple moving average. Below 290, it is completely bearish, and that is not good for the technology sector. So we do want QQQ to consolidate for a few more days and spike above 321 and hold that level to eventually make a new all-time high. Amazon is probably the most interesting among the FAANG stocks, and I know that the chart can look a little confusing to you, but I purposely pulled the weekly chart first to show you that Amazon has been consolidating for a long time, since July of last year. So almost a year worth of consolidation, and it has been consolidating between 2,800 and 3,380. That is the body of the flag. If it does make it back to 3,380 or around 3,400, we expect it to take out the previous all-time high of 35.52, and the next price target would be 39.50, and the second price target from this bull flag would be 45.51. I don't expect this to materialize over the next few weeks. It will take a long time for that to materialize, and the first thing Amazon needs to do right now is to get back to the upper end of the weekly bull flag, which is 33.82. Zooming into the daily chart, you can see that Amazon is trading below 200-day simple moving average, which is 31.32, and well below 50-day simple moving average, which is 31.81. One interesting thing is that the 50-day simple moving average has been getting very close to the 200-day simple moving average. This is a slippery slope because if the 50-day simple moving average crosses through the 200-day simple moving average, we might have a bear situation. And if Amazon falls below 2,800, it will be bear market territory for Amazon. So we have to be very careful. Amazon has been consolidating for a long time. In 2019, it also consolidated for a long time before making another spike to the 2,000 and subsequently the 3,000. So patience will pay off for investors if you are committed in Amazon. But don't be naive because Amazon could easily fall below 2,800 in the short term, only to gear up to the 4,000 in the long term. So if you are fully committed in Amazon, as I am, I recommend that you will buy more when Amazon hit the 2,800 level. That said, Amazon is a very expensive stock, so definitely watch out for your budget and potentially diversify into other stocks that might get you more return in the short term. Here's the daily chart for Apple. It is a very similar story, which is consolidation for a long time, beginning with September of last year after the split. And the 200-day simple moving average is 129, and the 200-day simple moving average is 116. So right now, Apple is trading between the two simple moving average lines, which is a good sign for the time being, and it has been holding for a few weeks now. I do want Apple to go back up to 129 and hold there. If it does hold there, the next target would be 145. Which was the previous all-time high. Once Apple can surpass that with no volume, we will see Apple make a new all-time high very easily. All of this needs some sort of catalyst for the tech sector to move forward because right now it is stagnating between 50 and 200-day simple moving average. Overall, Apple does not represent high volatility compared to other stocks. My general thesis for Apple is that it is a great company. It is as good as cash as far as I'm concerned. Obviously, my philosophy is still very aggressive compared to other savers out there. I don't hold a lot of cash on hands. If I have cash, I would put in strong companies like Apple. Facebook is another one of my, quote, cash equivalent. And I know that sounds really comical because stock investing is very risky. But because I have high tolerance for risk, I do look at Facebook and Apple of the world are my cash equivalent. Another cash equivalent for me is Google, which we will be talking about next. But here, Facebook on the weekly chart, it does seem to have a consolidation pattern with a multiple bottom. It hits multiple bottom, seems to be around $260. A strong support is 246 and another support is 240. Now, if Facebook for some reason fall below 240 in the next few weeks, it will be extremely bearish and it would have formed a double top and it could go all the way down to the 100s. But if Facebook holds on to where it is right now, which is well above 50 days and 200-day simple moving average, it will make a new all-time high above 304. Facebook, of all the FAANG stock, has been affected the least in the last correction. The next one is Google, which we will talk about next. But so far, I'm very happy with the performance of Facebook, and I think Facebook is due for a big breakout. On the daily chart, I do think that Facebook is trading just fine, stabilizing around 290. The next leg is 304. Right now, I have no daily resistance from here, 290 until 304. So if the market conditions allows it, it could get to 304 even this week. Google represents the most beautiful charts of the FAANG, at least on the daily chart. Google gapped up from the last ER earnings from 1920 to 2057, and it has been floating around 2050 for the last, 8 weeks. This is a beautiful, beautiful chart because I do think that Google will spike up heavily in the upcoming earnings season. If Google comes back down and fill the gap at 1920, then we'll have to see where it's going from here. But if Google continue consolidate over the next few days and weeks, there is a very good probability that Google will surpass 2145, which was its all-time high, and make a new all-time high. And Google in particular, I think it has a lot of runway. Google is another stock that is just as good as cash in my opinion. It has solid balance sheet. It is a very good company, and especially lately, the YouTube advertising has been rolling in a lot for Google. And so I do think that in the long term, Google is a very good company to hold on to, but in a short term, Google represents the best chart of all the FAANG charts that I've seen. Netflix is getting hit lately, but it's not too terrible. A few weeks ago, it hit the 200-day simple moving average all the way down to about 490, and then it has bounced back up since. Right now, it is trying to stay above 200-day simple moving average, which is 506, and it is trying to get to 50-day simple moving average, which is 536. Right now, Netflix is sort of a wait and see kind of stock. If it does get back to above 536, I do think that the bullish trend will resume. Netflix does have earnings in the middle to late April, so it will probably run up in the first half of April, and then we'll see how it materializes in the second half of April. The numbers from Netflix from a fundamental standpoint is not as good as its FAANG counterparts, but Netflix is getting up there, and over the last few years, Netflix has proven to be a really good partner when it comes to streaming products. Last but not least is my favorite Tesla. You could see that it is very clear to have a head and shoulder pattern here. Right now, it is at a good support, which is around $600 level. Although it ended the day today, March 29th at 611, it is still in the same ballpark of the low 600. If it bounces from here, then I do have hope that it's going to go back up to 748, which is now the 50-day simple moving average. But I will not be surprised if it dropped all the way down to 512, which is 200-day simple moving average. So be prepared and get your cash ready. If you are interested in Tesla, you will have a buying opportunity as it drops closer to the 500 area. And this arguably is the last best opportunity to buy into Tesla, because once autonomy comes out and you have robotaxi everywhere, the game is over. Tesla will lead the decade, no question about it. So I do think that we have a little bit of a window to buy Tesla now, although it could potentially fall down further. So I'm excited. If Tesla continue to fall, I continue to buy. So to summarize, Facebook and Google are the top of the chart when it comes to bullish pattern. Apple is doing okay, but it still needs to prove itself above 50-day simple moving average, and Amazon is building up something for the last 9 months, and we shall see what it is. It has done that in the past, and the next run could be big. Like I said, the first price target for me on that weekly bull flag is $39.50, and the second price target is $45.52. So with all that said, I think Netflix and Tesla are the weakest of the bunch right now. But if you are to hold on to these FAANG stock and Tesla for the long term, those would be the opportunities to buy. So this is it for this video. Thank you very much for making it thus far. If you are interested in future technical analysis, please comment down below and I will make future similar videos for you. Until the next video, bye.